Welcome everyone to our Long Options webcast. I'm Connie Hill. Happy you would join me here today. We had some exciting things happening in our account. But also a couple of weeks ago, we had a survey and some of you wrote in some really good requests and questions that I'd like to hit some of them out of the park today. And one of those is going to be about using option statistics, maybe where that might fit in with your trading. So we will incorporate that as we talk about some different opportunities. Now, I hope you're following me on X. I'm Connie Hill CS. We have the pleasure of having James Boyd out in the chat. Mr. James Boyd is James Boyd CS, and we'll post educational content, things we notice in the market. If you followed James, you know that he does a lot of posting. I don't do as much posting as James, but I do try to keep up. In any case, if we see things that we think are interesting that you might find interesting, we'll let you know about it. Let's go through our disclosures and get down to business. And I should say welcome each and every one of you here today. I'm recognizing lots of names in the chat. It is always good to see you here week after week, and welcome any newcomers we might have as well. Yes, Riceford, the redheads are going to be taking care of you today. That's true. All right, let's go through our disclosures here. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for general and educational informational purposes only. Don't consider a recommendation. We're going to be using the Paper Money downloaded software application. It is for educational purposes only. I think it's a fantastic tool, especially if you're trying out new rules, trying out new strategies, do them in your paper account. We won't talk about commissions, but know that commissions are part of the picture when you place your trades. If you place a stop loss, there is no guarantee the execution of a stop will be at or near the stop price. Typically, that just gives the go, and a guaranteed price will not be there. We'll talk about that. Past performance is no guarantee of future results. All right, upcoming workshops and market drives events. This weekend, if you're near Dallas, I know a few of you in this class live in that area or attended in the past from that area. All right, this weekend, August 1st will be the market drive event. Next week after that will be Orlando for a workshop that'll be technical analysis and option strategies, very fitting for those of you in this class. And then New York, the end of the month of August, will be advanced options. And we typically do an advanced option workshop about once a quarter. Okay, so they aren't as plentiful. And if you're in that stage that you're ready to start working on some of those advanced multi-leg strategies, then the New York would be a good place for you to go. So if you can get there easily, it's worth your while to do so. It's free because you are a member of Schwab, but you can bring a friend or somebody with you, but just make sure when you register that you're bringing another person with you. All right, very good. Today, we're going to talk about long options and conceptually, which we always do at the beginning of this class. When we talk about options, price, time, and volatility are the main things that impact the price of an option. And so we'll talk about, especially as we're looking at some of our example trades, we'll talk about, hey, is theta waiting on this particular option now? Things of that nature. Okay, what are long options? Hopefully you've been through the Getting Started with Options class. If you haven't, it would be a good place to start. But this is probably one of the first strategies that you will do and learn in the option strategies class, or in the of all your option strategies. Is, you know, you talk about, well, maybe I'll do a long call, which is similar to what you might be doing if you're trading a stock, right? You're looking for good entries, you're looking for the stock to move in the case of a call, go up. If you're looking at a put, then the stock dropping is always what your goal is going to be there. But we have a limited amount of time that we can look for that. If you're holding a stock, there's no time limit how long you can hold on to a stock. But the options contracts that we buy have an end date. It's called the expiration date. So we need the stock to move a particular measure before it gets to that options expiration date. And the sooner it does it, the better. These options are considered theta negative, which means time decay works on them. Time decay works against us as a long buyer of the options. They are typically Vega positive, which means if implied volatility goes up, that helps the price of the option. So is that implied volatility? If it swells a little bit, that's good for us because the price of the option goes up and we can benefit from that. And you need to know, in a long option trade, the net debit that we pay from the beginning is what we could lose in the trade. So we could lose all of it. That's not going to be our intent. We don't want to ever do that as a buyer. Okay, but we do need to know that that is what the risk is on this trade. All right. Let's see, Jay Richardson says there's an advanced virtual events coming in August too, if you can't make the live again. I appreciate you bringing that up, Jay Richardson. Once in a while, we will do some virtual events. You can find those out on the Schwab calendar. Let's take a quick look for those of you that might be interested in that. Let's jump over to the calendar. And you got to be logged in. I think you have to be logged in to see this, okay? And I'm just going to go to learn and go to Schwab Coaching here. And you're going to just scroll down past our faces. And then in-person events, you can view that calendar. And that's also where you register. The advanced options virtual workshop would be over here under this link where it says view calendar. And then you would see basically webcasts coming up. And if we go out to August, you have to go out there a ways. You should be able to find that virtual workshop. Okay, that's where it is. All right, let's head over to my Thinkorswim. And it's been kind of an interesting day in the market. Looks like the SPX is holding on to some gains at 0.42%. Initially, it was just the Dow index that was up today. Let's see how it's doing now in our DJI. Oops. Let's try that again. There we go. Make sure we've got the ticker there. So the Dow was up initially, and now it looks like it's up about 1.25%. Bouncing nicely off of a 10 moving average and a 30 moving average is what the red line is. The NASDAQ, let's take a look there. NASDAQ's been a little bit weaker in this pullback that we've had. The Dow has been stronger, the S&P 500 has been stronger, but the big dogs that lead the NASDAQ, typically, they've really struggled. So looks like another down day so far on the NDX, but I like what we're seeing here in this today's candle. It's not guaranteed it's going to look like that when it closes, but this is what we would call a hammer candle. A hammer candle has a little body, like the head of your hammer, and then a long shadow down here, like your handle would have. And it means essentially the message here is that a bottom is being hammered out and could potentially look for reversal here. Steve Nissan, who brought candlestick patterns to the Western world, he says for him, doesn't have to be for everybody, but for him, a hammer candle is good enough validation. Some people do like to wait for confirmation the next day that the market or the stock, whatever you're looking at, is reversing. And it doesn't necessarily mean the whole trend is going to reverse, but just maybe that swing of momentum for the time being is what might be getting ready to shift. All right. Now, let's take a look at where our positions are, because we're not going to spend a lot of time on that. Let's go for the bad news first. All right, the bad news first is CH. Let's see here real quick. CHRW was we got our teeth kicked in on this one. All right, we had this nice upward trending stock. We bought several months worth of time in it because we thought we're going to be in there for a while. Has a nice overall bullish trend to it. And so we got in right here. This was just last week in our class. And it kind of fumbled around inside this flag pattern for a little bit. And then, man, it crunched down here. Look at that huge gap. Hopefully you can see it. I've kind of got a red circle around it because that's when we got out. Okay. We see something like that totally violate a trend, totally break through the support areas. then it's not going to be that good for us. And our price of our option was down about 50%. And that's kind of an expensive option given that the stock was over 200 bucks when we bought into it. So we're out. We're glad we're out. We're glad we're not down here, maybe getting out at 50% loss as opposed to something much bigger than that. Okay, that we're seeing there. All right, let's talk about the good news. Apple stock. Last week we talked about doing options with a little bit more time and kind of trading them like we might trend trade a stock. Okay, we went out, we bought at least a 60 something delta. In fact, here is what I wrote down from our rules from last time. We were looking to buy 5 to 7 months worth of time. We looked to buy the first 60 something delta, whatever that happened to be. We wanted there to be more intrinsic value than extrinsic value. And we put our stop loss at 50%. Now, our stop loss on CHRW, I might have got out before it actually hit that 50% loss, okay? And then we plan on being these trades for quite a bit of time. But when the delta gets to about 0.83, we're starting to lose some leverage. So when it starts to get a 0.383 delta or higher, we might consider reevaluating the trade, seeing if we still like it. If we still like it, we may close down our current position and get into another one. Many times when we do that one action, we call that rolling because it happens all in one ticket, but we're essentially closing down one trade. There are commissions, opening up another trade. Again, commissions are going to apply. So that's kind of what our game plan is with Apple. Let's take a look on the monitor tab, see what it's looking like here. So when we got into it, we bought it, it was $30.15. So an expensive option contract over $3,000. Right now it's at $37.95. It's up a little bit higher today, but right now we're up on that trade about 25%. So, and over $700. Okay, so what are we going to do with it? We're going to let it work. We're not worried about it. We're feeling pretty good about it. If somebody really wanted to change the stop loss and crank it up a little bit, you could. We currently have it set at 50% of the price of the option. I'm going to leave it there for now. I'd like to see it get a little bit higher before we adjust that stop loss. So sometimes people kind of get in a position where they say, okay, I'd be happy with that gain, but if I lose it, or if it starts to decay, we don't want to necessarily, we might want to try to get out at a break even or something like that. So that is our plan with Apple. Any questions on either of those trades? Chris says earnings are coming up on Apple. Close it or write it out on Hope. They are having earnings coming up, right? They're going to be this week. The plan with these, because we intend to stay in it for a period of time and trade it like treat it like a trend trade, our plan is to hold over options. Okay. And I mean, we bought, what month was that contract? That was a December contract. So we would plan to go through July earnings. We'd plan to go through October earnings if we're still in it. Okay. So great question. All right. Kevin's got Casey on the mind here. Casey stock, he said just was just like $100 last year, wasn't it? Should we see what it is right now? I'm curious. Now I'm curious that you mentioned it. Well, it's only 860 now. Yeah, talk about some nice juicy uptrend on that particular stock. All right. I mentioned last week you guys had some, or 2 weeks ago, you had some really good questions out in the survey. And so question number 1 and question number 2 we're going to get to. Let's go to our first example that we're going to take a look at here today, which is going to be CrowdStrike. As we look at the trend of CrowdStrike, definitely a bullish trend. The blue line here is an exponential 10-period moving average. So it did move below that, and it also moved below. It was kind of hanging around the 30 simple moving average last 3 days, but pulled down below it earlier today. It too has a hammer candle, which means possible reversal of momentum. Doesn't mean the whole trend is going to change. But on this stock, what's interesting, put in a new all-time high here, and that was on the 15th. So that was just last couple of weeks ago, right? Right here was the most recent higher low, okay? And so what's interesting here is yesterday, man, it went down and met it in that area. Right now, today, it's trading maybe a little bit above that higher low, okay? So somebody's saying, you know, maybe the trend is changing because we did have a slightly lower low here. Totally valid, right? We're kind of watching those candles real tight. However, I told you just a minute ago what that hammer typically means. And so we're going to go with the trader that does not wait for confirmation. Why is that? Because we're not going to be together tomorrow. We're only together right now. And we talk about being on time to the party. And I'm going to say if you trade with a hammer, you're maybe getting to the party a couple of minutes early. Okay. As opposed to maybe just on time. Now, by the end of the day, if we have a bigger candle here, suppose this hammer turns into, say, a piercing line, which it can be a reversal candle as well. That would mean the body of this candle is even deeper into the body of yesterday's bearish candle. And so it might give us a little bit more bullish conviction there if today's price moves deeper into yesterday's candle. All right. So what are we going to do with this one? Well, we're going to use it to replace our CHRW. I wanted to have a couple of trades on there that were a little bit longer in time. Last week, we looked kind of at the one-year trend, just kind of getting an idea. You know, it started the year out here about 117 or so, got up to 217, pulling back. We already talked about the pullback here. But say the last 6 months has been quite bullish, and they also did a 4-for-1 stock split. It had been trading over $800, and so did this nice little stock split that makes it a little bit easier for retail traders to trade it, that particular stock. So what we're going to do, we're going to go to the trade tab here. We've got CrowdStrike, and well, let me answer one of the questions before we pick our strike price. Okay, one of the questions was, what other things should we look for in terms of long options? Do we need to look at something? We want to look at something maybe has some better probabilities, things that might put us in a more favorable position, essentially, to be successful. Do we need to look at the sector? That's certainly something we can do. Can we look at longer term trends? You know, if you have a stock that's long-term bullish versus, say, 3 months bullish, you might be more confident in it that the trend will continue, but it's never a guarantee, right? So that can be something we look for. Sector strength, or I'm going to say even industry group strength, okay? Now, this is an IT stock. These guys are in the cybersecurity space. With everything going on with AI, with extra computing, do you think maybe something involved in the security, trying to keep our website safe, is going to be in high demand? Yeah, it's probably likely to still be in high demand. Trying to keep our website safe. If you're not sure what a company does, come over here to the Analyze tab, come to Fundamentals, and it provides cybersecurity solutions in the United States internationally. So I would say having a favorable sector / industry group, or whatever their business happens to be about. What about support and resistance levels? Absolutely paying attention to support and resistance levels. And typically we look for signals that either have us maybe bouncing off a support level, or we also look for those breakouts, whether it's a breakout of a flag pattern or a breakout of above resistance, or a breakout of any other pattern, maybe even a triangle. Yeah, we're absolutely going to be looking for all of those. And with long options, you have to be a little bit pickier, I'm going to say. Okay, pickier that you're on time to the party, like we've talked about, not getting in 2 days late when maybe the move started. With verticals, you can get away with that, or even diagonals, you can get away with that a little bit if you're not exactly Johnny on the spot. Okay, so yeah, all of those things help put odds in your favor, and you want to put as many as you can. So in this case, IT actually, I'm going to look down here in our sectors, and information technology is actually not doing so good. In the last month for the entire sector, it's down 2.58%. But you're going to find there can be some pockets like cybersecurity. And right now, like software is recovering, there are going to be little pockets, and some of those pockets, right, today, semiconductors were selling off pretty hard, and they have been on a steep pullback. So yeah, that sector isn't doing well. So then we want to make sure that the stock, the story of the stock looks like it should continue because of the industry group that it's in. Okay. All right. What about this guy? What are we going to do with it? I told you I wanted it to replace our CHRW trade. Okay. So we're going to come out here to, let's see what I decided on here. I think I decided on December. So we'll open up our December options. Here's our open interest column. And we're going to take the first 60-something delta. Okay. So our first 60-something delta here is on the 182.50 strike price. Now, it does not have as much open interest as some of them, but we're just doing one contract that's plenty liquid for that. Okay. It's an expensive option. We're going to maybe try to get it at the midpoint price here. So let's go ahead and queue it up. Midpoint is 30.85, 30.90. We'll put it in there. That'll be just fine. And we're going to put in a 50% stop loss on this, just guaranteed. If it gets that low, then likely the trend has changed on us. Likely some bad news came out on, like CHRW did. So let's put in that stop loss here as well. So we'll do a first trigger sequential, create that opposite order. And we're going to make it what? Make that $15. Let's go $15.45. That would be 50% of that. It's not going to be a limit order. It's going to be a stop order. So if it gets to that point or lower, it triggers the market order, gets filled at whatever the next available price is there. Make it good till canceled. All right, we're going to send this to our long options bucket. Okay, so that one we're going to try to trade it like a trend trade. Right, the peak and the pullback and the peak and the pullback until it gets in an area maybe near an 83 delta. Now, the other thing we did on this, these trades, is we did put an alert on the delta. All right, so I'm just going to right click on that delta value, hit create alert. And if it gets at or above 83, we want it to send us a little alert about it. Just let us know that it has made it to that range. All right, so we've got that set on it. Very good. Next up, this is a stock that we've traded. We've actually got another trade on it in one of our other classes. PANW, Palo Alto Networks. Overall, especially short term, it's had a fairly bullish trade. If we were to find it on our liquid options list here, we'd see in the last month with this little pullback, it's down 3.87%, but over the last 3 months, it's up about 76%. And we really want to work with stocks that are really moving, right? As opposed to something that's gently going up, time decay can really work against us in a situation like that. Well, here, it's down again here at what? Support. It's had broke out through the resistance here, really been honoring this support pretty well. This is a little bit lower there earlier in the day. Again, it's got another hammer candle right at support. And so when you see those reversal candles and they're at support, it gives them a little bit more strength, gives them a little bit more credibility. Oh, a reversal candle, a hammer right at support. What could that mean? Again, you could wait for confirmation on this. You could wait for a hold. right? You could say, oh, well, there's just the low day. Maybe wait for it to hold tomorrow. Again, and maybe it moves by the end of the day closer into the body of the candle. That would be an even stronger move. But we're not going to be together tomorrow for confirmation, so we're going to do the trade today. Over to the trade tab we go. And actually, before I go there, target. What would be a realistic target on this? Well, probably maybe up to where it keeps hitting resistance. I drew this line in, I don't know, a few days ago, and it seems to be holding its place. Oh, I didn't want to duplicate that. I just wanted to extend it. I just wanted to extend it to the right a little bit. Let's go here. There we go. So we could see 361.89. Something maybe a little short of that might be a good target, right? Some of you might say, well, maybe you want it to go above the 10 moving average here before you get in. That's a possibility too. You get to choose how much evidence you want that the stock is moving that direction. So again, we're going to be 5 minutes early to the party, maybe on this one. So on this one, I was looking to do a target just short of this 361. I was going to say 361.89 is what the target is. So maybe a little bit shorter than that. What if we go 360? Well, let's actually just use 361.89 because we have a few candles that are above that too. And then as a stop loss, we're going to put on 50%. Okay, we're just going to do that. So let's determine how much time we want to spend on this. Now, this is from another class, so don't worry about those. And on here, how much time do you think we need for it to get up there? Typically, we'll say, it might take, I don't know if it'll take a couple of weeks. It took a few candles, to run from, say, here. It took a few days to get up to there. So I would say in a couple of weeks, we would hope to have either hit our target or maybe taken some profits and are out. Hopefully, it doesn't break through support here and hit our stop. We're counting on that support to hold. So what we're going to do here, we're going to go with the September option. 319 is where the stock is. So we're going to do the at the money. Okay. Right now, it doesn't have any intrinsic value, but that is our at the money option. And so we're just going to do this. We're going to say buy. Actually, let's do buy custom with an OCO bracket so we can put on the target and put on the stop. Now, our target's going to be based on the price of the stock rather than the price of the option. Let's come over here. Let's change this to a market order. Good till cancel. We'll make both of those good till cancel. And then we're going to go put in the price of the stock there. All right. So PNW, if it gets to be greater than or equal to, what was that number? 361. I think it was ARG. I have to go look real quick. Let's, I did write it down. I have it on my other screen. Okay. We said it was going to be at 361.89. 1.89. Let's make that a 1 and not a 0. All right, that looks right. 369.81. If it gets up to that, we'll be happy. We'll get out. That'd be a nice little run from, say, 320 up to 361. Yeah, we'd be happy about that. All right, let's save that. And then this one, we will have it be based on the price of the option again. So up here, 33.10 is our price of our option. So that's going to be what, 1670? Something in that neighborhood. Let's just check it out here real quick. It's going to say, there he goes. There's the little calculator. So 33.10 divided by 2, 1655. All right. That is going to be a stop loss order. we will want it to trigger market order, get us out of the trade, and we've got it GTC. All right. Let's send this on its way to our long options bucket. All right. Next one up, we are going to do another stock here. Oh, actually, do you know what? I was going to answer one of the other questions while we were talking about CHR or about PanW. Okay. And this is what the question was. Do you use today's option statistics when you trade the long options? The answer is you can. You absolutely can. And some people might use it to help them determine what kind of a strategy they want, what strategy they plan on using. So here's today's option statistics on PanW. Let me get a pen out here. And probably people will pay attention to the calls and the puts and the numbers of those. So initially, let's see, it looks like we have a few more puts transacted today than calls, but that doesn't really tell us a ton. What really can tell us some is, okay, if it was traded at the bid price or lower, do you think that's somebody buying options or selling options? Well, if it's near the bid price or lower, that could be somebody selling, right? Trying to, maybe they were long an option, they're selling it off. And so 9% of these calls met that category, but 16% actually traded at the ask price or above. Well, if it's at the ask price or above, do you think they're more likely sellers or do you think they're more likely buyers? You can just answer that to yourself. You can fill it in the chat as well. Okay. Yeah, they might be more likely buyers if they're working at the ask price. And then we have this one here where actually most of them were between the market, so kind of at that midpoint price. And some of them could have been bought, some of them could have been sold. Okay, so that one is not all that telling for us, okay, because 73% of the options were at that midpoint price. But what about using delta? Okay, on the deltas, there were 39% of the deltas were between 0 and 20. So again, ask yourself, do you think those are more selling or maybe more buying? You see people out here buying a 0 to 20 delta a lot? Probably not a ton, right? So you might think, okay, maybe this is more like sellers. What about 20 to 40? Maybe the same thing, maybe more like sellers. So now we have 39, 49, 50, 55% actually maybe in the selling range. And then a 61 to 80 delta could be buying, could also be selling, right? If somebody gets to, say, an 81 delta and they want to roll it, they want to have more leverage, that typically, I shouldn't say typically, but that very well could be something that is sold there as well. Okay. Could there be buyers? There could be buyers. It's not as usual to see somebody buy that deep in the money, an 81 delta or 101 or 100, but it could happen. There could be reasons for that. Okay, so you just kind of think through, what is this likely telling us? And the one thing that maybe we'll just spend another moment on is on implied volatility. So this little section over here. Historical volatility is what that HV stands for, and historic volatility has been about 79%, which it's not like incredibly super duper high, but it is a little bit higher. But the current IV percentile tells us what percentage pricing are the current options. And they're at a 76%, which means about 76% higher than where the range typically is. So that gives you the idea, oh, these options might be a little expensive. Well, we're not going to be selling it in this class because we don't sell any options in this class. We only do long options. But like I said, it could be some information that you might use to decide if you want to be a buyer or a seller. And so if it's higher than it's been 76% of the time, that's why somebody might be considering maybe it's selling strategy more than a buying strategy. Okay. The other thing with this is implied volatility. If you've got, yeah, your options are more expensive when you have high implied volatility, and we can see those numbers over here. But it also means there's an expectation of movement. And we want these things to move. We don't want them, thinking around dilly-dally, right? We want them to move. We want them to move quickly in the direction we need them to go. Okay, so that is the answer to question number 2 there. Oh, as I look in the chat there, it looks like we've got a survey out there. Happy to see that out there. We always encourage you to participate in the survey. It's a way for you to voice your opinion. It's super easy. 2 questions, plop, plop in the radio button. On a scale of 1 to 10, what your thoughts are, just hit a button, you could be done. There's a couple questions you can answer if you want. And this is where I'll encourage you to send me information that you are interested in, which is where some of our questions came from today, was that survey. So feel free to use it to communicate something else to me that maybe doesn't necessarily answer the question there. Okay, it's just some good real estate for you to be able to use. All right, James will post that in again before we end our session. I'll try to remind you that that's the case. Sometimes I forget, but I'll try to remember. We've got a survey out there. We love your feedback. I'll read every word you write. So do our managers. They read everything as well. All right. Next up, we are going to take a look here at another stock. We're going to take a look at Delta. This is a 1-year chart on this. It's been doing pretty bullish here. Started the year, or there was a low down here at 50 bucks. Got as high as 95. What's it doing right now? Well, right now it's doing a couple things. It's moving above the 10-period average and the 30-period average. This did have a significantly lower low here, right? The previous low is here. It was significantly lower than that. So sometimes people might hesitate a little to go, I don't want to get in on just one bullish candle here because it hasn't gone through anything. But what I'm seeing here, this is about the high point of the low candle in the pullback of that, saying, hey, there's our lower low. And it went above it. It didn't do that yesterday. It didn't do it the day before, but today it is. So that might be giving somebody a little bit more confidence. Okay, it's surpassed that peak that was the low candle. All right, maybe it is safe to get into, or safer. Some people might want to see above this point here because that was basically the first higher low. And it's getting kind of right in that range. Current price is pretty close to where it closed that day. Okay, so it looks like media is just barely edging above that as well. All right, we are going to use this as an entry signal. Where would be a good target for Delta to go to? I think it could be reasonable to put it up here, right? If we come along here, see maybe where the high points are. We've got 3 candles there, so about 95 and some change. Let's go for that 95.29. Okay, we can always adjust our target if maybe it gets a little bit short of it and maybe puts in a bearish candle and you're like, oh, things are changing. It's not maybe going to get quite to the target, and you consider getting out early. That's just fine. How much time does it need? It might need a little bit of time here, right? I mean, this was about, when was this peak day? July 2nd to the low of July 23rd. So that was about 3 weeks of a pullback here. Now, it could take 3 weeks to get back up, but it's already moved part of the way there. So probably at least a couple of weeks. So we buy at least a couple of weeks worth of time. And in addition to that, try to get, some extra time where the stock has some room to move, right? It has some time that time decay doesn't become a huge issue for it. We're going to do the September 18 options. August is a little bit short. So let's go ahead. We're going to put in an at the money, which right now looks like it's going to be the 90 strike. All right, so we're going to say buy custom with an OCO bracket. We'll put the target in there again, as well as the stop. So stop here. We could do one of two things. We could base it on the price of the option. You could also, if you wanted to, base it on the price of the stock. We could say, hey, if it comes down here and goes lower than today's low, then the bounce isn't really following through there. So that low is 86.23. So let me just make a little note in here. Let's go 86.13. We'll give it 10 cents. I know that number is not super bright on the screen there, but let's go ahead and fill it in. In that case, what we could do, we could just do a first trigger sequential, and we could just get rid of this bottom one. We'll delete that, and we'll put the condition all in this one. So we'll do a market order, get till cancel, and we'll put those two prices in there. So we'll say, all right, if the price of the stock gets greater than or equal to that high point, which was about 95.38, I think actually it was 29, 95.29, I think. Or if it gets less than or equal to 86.13, we want out. And let's put that number in there again. 95.29. There we go. All right, whichever one executes first, great, it goes and cancels the other order. I'm gonna go ahead and save it. Remember, it'll trigger market orders. We don't know what the price would actually be at that point. And we're gonna hit confirm and send it to our long options. All right, so to kind of summarize where we are, our Apple trade was still good. We're gonna just let it continue to work. We put in a new trade on on CrowdStrike, CRWD, and we bought a little bit more time with it. Okay, if we look at our filled orders here, out to December, and we did a couple of shorter range, one Pan W, one at Delta, but they're bouncing a support here right now. We're going to see if they can run up to the current resistance level. Okay, that's what we've got on store there. Very good. Well, I do hope you're following us on our Trader Talks channel because it makes it so much easier for you to find our content. I know you want to know when James is doing stuff. I want to know when James is doing stuff. So it makes sense that you might want to know too. All right. So if you're on our Trader Talks channel, man, you can find that information so much easier. Now, I think, did you already teach today, James? You might have already taught today, or maybe you don't teach today. In any case, you see what's coming up. Next up is going to be getting started with technical analysis with Barb Armstrong. She does a super job there with that class. I know a lot of you love going to that class. So you can find our content. You can go to our playlist. Just makes it easier to find what we're doing. Now, again, I'm going to encourage you to fill out that survey on the way out here today. We always appreciate your feedback. If this was helpful to you today, hit the thumbs up on your way out. That allows others to see that it was useful to you and that it might be useful to them. Helps us in the YouTube algorithm if you do that. And James and I would love a follow. James Boyd CS, Connie Hill CS out in our X account. It's free and easy. All right, you guys, we're going to follow up on those 4 trades next week. So take just a quick break and come back for getting started with getting started with technical analysis. Have to move it to the right spot. All right, you guys, we'll see you then. Bye-bye. Thank you, James, for your help as well. Thank you all for being here. Bye-bye.